JPMorgan has expressed reservations about the recent surge in the cryptocurrency market, attributing the rally to unwarranted optimism surrounding the potential approval of Bitcoin spot exchange-traded funds, ETFs. In a recent research report, the bank questioned the prevailing bullish sentiment, dismissing two key arguments that have fueled it. According to JPMorgan, the belief that the approval of a spot Bitcoin ETF would attract new capital to the crypto markets is flawed. Instead, the bank contends that existing capital is more likely to shift from current Bitcoin products such as the Grayscale Bitcoin Trust and Bitcoin Futures ETFs towards the newly approved spot ETFs. Despite the anticipation, JPMorgan pointed out that similar ETFs in Canada and Europe, which have been in existence, have attracted limited interest from investors. Furthermore, the bank cast doubt on the idea that a spot Bitcoin ETF approval would mark a significant victory for the crypto industry and a setback for the U.S. Securities and Exchange Commission, SEC, leading to a softened regulatory approach. JPMorgan emphasized that recent legal rulings, such as those involving Ripple and Grayscale, may represent setbacks for the SEC, but regulatory tightening within the crypto industry is unlikely to diminish significantly given its current unregulated nature. The report also disputed the bullish impact of the upcoming Bitcoin halving, projected for April or May of the following year. JPMorgan argued that this event's effect is unpredictable and has already been factored into current market prices, rendering it an unconvincing argument for further market gains. Overall, the bank remains cautious about the sustainability of the crypto market rally, urging investors to consider the potential risks and uncertainties in the evolving regulatory landscape.